back to the NiftyNookThrift channel. My name is Sarah, and welcome to another video. So today I'm here with my husband, Jonathan. So,
hi.
First time you guys have met him, and we are finally doing the tax video to help you guys out with some tips since tax season is coming up soon. And yeah, so typically this channel is focused on fashion reselling content. I do thrift hauls, what sold videos and such, but we also wanted to get on here, and since my husband Jonathan is a CPA, we also wanted to get on here and discuss finances for the reseller. And I just realized that if I touch the table, I will shake the video. So I'll let him introduce himself, and then we'll get started into some questions I'm going to ask him and some questions from you guys. So.
All right, hey everybody. Just fair warning for disclosure, I have a little bit of a speech impediment, so just bear with me, please. And just a little bit of a background on myself. So I do have a CPA license. I have helped in the past to prepare tax returns professionally for a tax firm. In 2017 and 2018, I no longer prepare tax returns professionally, and I now work in a different area of accounting. But I do our own internal bookkeeping and our own taxes, and I do for some friends and family as well on an ad hoc basis. And so now this is very important for a disclosure. This will also be in the description of the video below as well. Everything presented in this video is for informational purposes only and is not intended to provide and should not be relied on for tax accounting or legal advice. You should consult your own tax, accounting, or legal advisors before relying on any of this information in any way. I do not currently hold myself out as a tax professional and am not currently a registered tax preparer with the IRS. Also, any opinions or views presented in this video are my own, and they do not represent the views of any of my current or prior employers.
Okay, so thanks for the introduction. So just a little bit about my reselling business. If you've watched some of my previous videos, you will know that I've been reselling for almost 4 years, in primarily fashion, men's and women's fashion, some children's. But I just recently went full-time with this endeavor, probably 3 or 4 months ago, about January 1st. And so I want to kind of start out and ask Jonathan, you know, what is the difference from the finance end from doing this as a part-time thing and then someone who wants to do this full-time? What would you say are like the top 1 or 2 things someone should keep in mind when making that transition financially?
From part-time to full-time, I don't know that I would say there's a particular difference between the two. From a financial perspective, obviously, if you're going to treat it as a real business, probably should be tracking how you're doing financially, especially if you're relying on it for income to survive on. You know, should be tracking how much you're bringing in, how much is going out. Taxes are a big thing. So obviously this kind of being general about taxes. One thing that a lot of self-employed people don't understand is, you know, I work for a firm. I get a W-2. I get a paycheck every so often. They're automatically taking out taxes from my paycheck before I even see that paycheck. When you're earning income as a self-employed person, the IRS isn't taking any out for that. You have to put some aside for your taxes. And you're gonna owe just as much, if not a little more taxes than the rest of us are, just because you're counted by the IRS kind of both as the employer and the employee. And so you may have to pay those on a quarterly basis. It depends on if you also have a W-2 income in your household as well. But generally, you're going to have to pay those on a quarterly basis based on how much you're going to owe at the end of the year. So, and I'll say on that too, that even if you're part-time, you still got to be tracking that for taxes. There's a limit as far as if you're self-employed, you begin having to report that income and paying those taxes to the IRS at a pretty low amount. I want to say it's a few $100s. I'd have to check for sure, but it isn't very much where you still really have to begin that.
And so back to that question, part-time going to full-time, they're going to want to keep that in mind, especially if they're making more money, because they're going to have to pay more taxes. And so they're really going to have to put some forethought into planning and setting aside, whereas if they're part-time, that might be some money they can come up with, you know, come tax season or something. It's going to be a lesser amount likely, right?
Sure, yeah. It's very much dependent on your income. I always say more income is better. You're not going to get hurt for having more income. You may have to pay a higher percentage of that income if you're in a new tax bracket, but more income is always better. But yes, you're going to have to set more aside for taxes depending on how much your income is, right?
All right, cool. So just kind of a fun question for Jonathan. What have you thought of me doing this whole reselling business, and you know, from the time that I first got into it to where I'm at with it now? This was kind of something that I just kind of went after and kind of showed Jonathan what I was doing. Of course, you know, we discussed like from the financial end, like what was okay and what was not, but what are your thoughts on just reselling in general and the profits we've been able to make?
Yeah, I would say, and don't consider this any investment advice in any way whatsoever. But I would say for me, it was an interesting thought. I hadn't thought about it as a business too much. But then like getting into it and seeing how it all worked, I was like, this is really interesting. And seeing that there was actually a market for it. I think we work well together in that we kind of come at it from a different perspective, whereas Sarah's got all the ingenuic ideas. You got the entrepreneurial spirit. And I'm more of the, okay, I want to see the dollars. I want to see how this all works out. So I would say having that interplay is a good idea, because you want to have that entrepreneurial spirit to go after it and get into it. I mean, this is not something that I probably would have done myself, but also be grounded in the numbers. And by that I mean, don't just go out immediately and purchase, you know, $100,000 worth of inventory because this thing is just going to take off immediately, right? It's like growth is good, but at the appropriate pace, because having inventory on hand is risky because you've invested that cash in that inventory, and you're hoping it's going to produce income for you, but it hasn't as of yet. So growing at an appropriate pace, kind of how we do it is we say, well, okay, there's an amount that Sarah has gained in income over the past few weeks or the past month from this. Well, okay, out of that, what percentage should we reinvest back in the business? And so it's
not all of it.
Right. It is not all of it, because the business has to be making some kind of profit to you, and
right? You've got to track that to know.
Right, exactly. So having it, I think having a process, having it forethought out of, you know, I'm going to reinvest maybe 25%, 30%, however much it is back into the business.
And we'll discuss a little bit more as we go about what we do. But first, those are just a couple questions to get us started. But first, we're going to answer your guys' questions that were very specific. And then towards the end, we'll get more into like what we specifically do for our process of tracking, you know, our receipts and stuff like that. So let's begin with the poll that I did. And by the way, thank you guys all so much for responding to the polls, the various polls that I've done. This one in specific was about what you struggle with when it comes to your finances. So I had asked, what is the #1 thing you struggle with when it comes to tracking your finances and filing taxes as a reseller? And overwhelmingly, the vote was for tracking my expenses properly. We had a 56% vote for that. So let's start with that topic of tracking my expenses properly. So when it comes to expenses as a reseller, you know, we've got a wide variety of different things, right? Some things people are immediately going to think of and know, like, oh, my cost of goods, right? My receipts from Goodwills, stuff like that. You know, like if you buy a light box or lighting or anything like that. So there's those expenses that you want to track, and then there's also lesser known expenses that you may not know, deductions that you could take. So let's first talk about what are some ways people can set themselves up to track their expenses in an effective way? And then secondly, what are some things they may not have thought of that they could be expensing and deducting that they haven't been?
Okay, good. So first, how to track all those expenses. So from the IRS's perspective, I think that a lot of people think that there's like one way to do it, and there's like, well, as long as I do this, that will be 100% surefire way that the IRS will be happy with me. I don't think that's the case. There's a lot of gray area with, okay, well, how much evidence do I need? I'd say what we do and what I would highly suggest to build the best defense possible in case you're ever audited is to save all the receipts. The receipts should be itemized, so not just, oh, well, I printed off my bank report and it says Walmart on there. Well, Walmart could be a lot of things. How does the IRS know that you actually bought something for your business at Walmart versus a bunch of groceries, right? So having an itemized receipt, how to keep track of those things, I recommend learning some basics of some kind of spreadsheet program like a Microsoft Excel.
Or Google Sheets or something like that. If people haven't purchased Excel,
sure,
there's other options.
Oftentimes, if you go online on your bank account, they'll allow you to get a listing of your transactions into Excel, or sometimes they'll say it's like a CSV file, which if you do a CSV file, you can turn that into Excel. And then so it's already there for you. What I will do then, so each transaction will be a row on there, and then
after you import it, correct?
Right.
Okay.
Right. After you import it, generally, yes. I'm sorry. Actually, after you export it from your bank into Excel,
import it into Excel.
Right.
Exporting from the bank. Yeah.
And then, so if you've got, let's say, 10 transactions and you have all your receipts, well, I would write on the first receipt, I would write as receipt number 1. And then I would put that in Excel on that row as that is receipt number 1. And then I would put all the receipts, if you can take a picture of them or scan them into an electronic format. I don't know about you, I prefer electronic format a lot than keeping paper files everywhere.
Paper's flying everywhere over your house.
Yeah.
Right? And a precursor to this, guys, is we also keep a little bin, just a small little bin, that we place all of our receipts in. So business and non-business, but we especially do it for the business, to help track the business stuff. So after I have gone out and bought something, before I forget, I will take a pen and I will write on the receipt what it was for, like if it was for inventory, if it was supplies, or even if I just write for business, so he knows when he gets the receipts and records them, what it was for before he scans it in. Because if you wait on doing some of that, it will really pile up on you, and
you're not going to remember.
You don't remember.
No.
So it's best to just take care of it as it comes, and it's not overwhelming. Get your system down, and so I just wanted to add that in.
Yeah, so it also makes it easier. I mean, if you are a sole proprietor and you're not an LLC, like you're just...
Which is what I am right now.
Yeah. Then you don't have to have a separate bank account for your business. You can just do it all under your personal bank account. But you can get a business account, and that could help you to say, okay, I know all my business transactions are under this, and so you can download just that activity. Whereas I like to track all of our personal expenses too, just to know what's going on in our lives.
Keep a budget. You know.
And so I just download everything all at once, and I split it up. I got like 3 or 4 Excel spreadsheets up, and I'll just pull transactions over. Well, that's for this business or that business or for our personal, and then I'll log everything in. But if you're really like, I can't remember what's personal and what's business, or I went to Walmart and I bought 10 things of groceries and I bought 2 things for the business, right? It's like it might help to keep those individualized in 2 accounts. So those are some ways.
So first we've got, for tracking your expenses, save all of your receipts, you said.
Yep.
Have a way of recording what they are by reference number, or just by writing on the receipt, this was cost of goods, this was supplies, whatever. Save them either digitally or in paper, but save them. As soon as I make an online purchase and I get that receipt emailed to me, I immediately email it to him so he can then file it away. So, those are important to count too. And then the third thing you mentioned was importing a CSV file from the bank account into an Excel spreadsheet. So why would that, what would someone who has never done that before, they don't have much experience with Excel, what would they do next with that data?
So basically you just track all of that. So you have each row in there is going to be a transaction, right? And so then at the end, so how you would probably want to do it is you could say, okay, well, this transaction was receipt number 18.
And are you thinking they do this weekly or monthly, or? You
could do it however often you want. I personally, if it gets after about every month, like I like to close the books at the end of the month. That's a very accounting thing, is you close the books at the end of the month and then at the end of the year. I like to do it at the end of the month. We used to do it every 2 weeks, and that was getting a little cumbersome for me. I do it at the end of the month. Beyond that, man, I think you start forgetting some things, what things actually were that you're seeing in the bank account. So,
which is another reason why you may want to have a separate bank account for the business stuff.
Yeah. So you can then, I would also, for each row of the transaction, you can develop categories of expenses. So one would be like inventory, right? And then one might be supplies. I use supplies as a pretty general category for, stickers and tape and just general supplies for the business.
So the thermal label printer to the light box to the plastic bags I use for inventory.
Yeah, so then at the end of the year then, so you can kind of combine those together and say, okay, well, how much did I have overall in supplies? So you can do different charts and graphs. I will say, if you haven't ever learned how to use pivot tables in Excel, it's a little challenging at first, but that is one of the most useful tools. It basically allows you to take a whole bunch of rows and columns and things and create your own charts and graphs. So you can move fields around. You can say, well, I want this to be my value field and this to be my row and column, and you can really do a lot of good analysis to find out, okay, well, on a monthly basis, well, how much did I have in supplies expense this month? Or how much did I have in inventory expense this month? And then at the end of the year, it becomes very easy because you can just say, well, add all of these up in this singular category, and you can just get a single table for all those categories.
Yeah, and if you don't know how to do that, I don't know how to do that. So like many of you watching probably don't know how to do it either. If you don't, maybe just make some rows with your different categories, and then on a weekly or monthly basis start adding those numbers up, just so you have an ongoing record of it. Just keep some kind of record that is accurate. So
right.
All right, so the other question about expenses is, so the big ones, right? Inventory, that one's, most of you have probably thought of that. We've got supplies, my storage unit, gas mileage. What are some other deductions or expenses, such as home office, stuff like that, that most people maybe don't know that they can take or don't know how?
Yeah. So one thing I'll mention, I'll get to home office because that's a big one. One thing to mention, and this is probably more for your accountant or whoever's doing your taxes. So you mentioned earlier like a light box. So like sometimes you'll buy large pieces of equipment. those can fall under a different rule than just expenses. So the idea with the IRS is there are certain expenses which you're going to use immediately or fairly soon. Like if, you know, and they're fairly small amounts too, like tape and things like that, just general supplies. But other big purchases of equipment, maybe like a light box or something that you're going to be using for a long time, a desk, equipment, that sort of thing. Technically, those you'll need to talk to your tax advisor about, because theoretically you may not be able to deduct all of that in a single year, because the IRS basically saying, well, if you're using it over several years, I'm not going to give you a full deduction for that in a single year. Now, there's a special election you can make on your tax return, which is I think it's called the Small Business Taxpayer Safe Harbor election. You have to specifically make the election on your tax return. That allows you to deduct any equipment under, I believe, $2,500. So that's a good thing. Just make sure your accountant is doing that on your tax return, then you can deduct.
Is that any equipment adding up to $2,500 or like one piece of equipment?
Any individual piece of equipment under $2,500 then can be fully expensed. And even if you can't do that...
So most things with reselling are going to be...
most likely so, right? And even if you can't, there's other... Then you start getting into the tax depreciation rules, which... I would need to spend about 2 weeks in tax class explaining all of that. So we'll probably forgo that for now. But just understand the depreciation rules for tax are extremely complicated. So getting to these other expenses like home office.
Home office, yes.
Home office is a big one. So a lot of resellers will be using space in their homes. So the idea is, okay, so you've got your home, right? Well, okay, generally your home is treated as a personal asset, right? You're not using your home in your business generally, but you might be using a portion of your home in your business. And so the idea is that, well, okay, if a portion of your home is used for your business, then a portion of the expenses that you spend for your home are also business expenses.
Like electricity.
Right, and yeah, that one, there's a lot of expenses that can fall into that category. So first of all, how do you compute how much space you're using for business, or how do you know if you're actually using a space for your business? The IRS is pretty strict on that one in terms of how do you determine if you can deduct the cost of that space for your business. They're pretty strict. It has to be used only for the business. Now, I believe there's been some court cases and things that have to do with, well, if you have just maybe something other auxiliary in there, does that count? I usually use the rule, and this is just kind of my own rule. I've kind of seen some things online about it too, of, you know, things that would normally be in an office, if those are in your office there, probably okay. But if you're using a room as both for your business and an exercise room, probably not so much. It can't be used for two different things, just got to be a single use. And so then there's a couple ways. So after you've figured out that, yes, I do use that space for my business, and that can be, I work in there, only if, again, only if you're a non-employee. Like if you get a W-2, if you're an employee and you work from home, that doesn't count. It's that if you own your own business and and part of your house is used in your business, that's what we're talking about. And it could be that you work in there or that you store inventory in there. And so once you determine that a portion of your house is used for business, well, how do you compute that portion? Because that's the first thing the IRS is going to ask you to do, is say, well, what percentage of your total home is used for business? Generally, the way everybody thinks about it generally is based on square feet. And think about how many square feet is that room versus the totality of your house. That's one way to do it, but a lot of people don't actually know that the IRS says any reasonable way of computing that is actually okay. And they offer a couple of examples, is either square feet or could be the amount of rooms. And the amount of rooms doesn't include hallways and things like that. We do it based on the number of rooms in our house. So then basically what happens from there is you say, okay, well, if it's like, you know, if you've got 5 rooms in your house and 1 room is used for business, well, that'd be 20%. So you take all of your expenses. So there are different types of expenses. There may be expenses that are just for that 1 room, like you had that 1 room repainted, just that room. That's 100% deductible because it's just for the room that you do your business in, that you operate your business out of. But if it's an expense for the house overall, then it's allocated. So you get 20% of that expense in the case that we're talking about would be deductible because you're using 20% of your business. Expenses that can fall under that, mortgage interest. If you have private mortgage insurance, property taxes, repairs and maintenance on your house if it's for your house overall. So, but I even do things, I think there are gray areas here. I do things like paper towels and toilet paper and things like that. I mean, if you're at an office, hand soap, the office is going to pay for those things,
electricity.
Right? Electricity, especially all of your utilities.
Especially with the light boxes.
Yeah, all of your utilities, things like that. I think where it gets to where I'm not comfortable with is when you start talking about like coffee and things like that. Yeah, an office may pay for coffee. I think you're going to have a hard time proving to the IRS that that's a business expense.
So how is the electricity done? Is that a percentage of what? How do you do a percentage of the bill? Yeah,
so you would just compile the amounts that you paid for your electric bill over the year, and then the amount deductible would just be 20% of that. Now,
if it's the 1 room out of 5.
Exactly. If you're saying it's 1 room out of 5. Now, hopefully your accountant is doing that for you because the way it's presented on the tax form is you report the total amount, but then there's another column for, okay, well now the IRS says take 20% of that. So you can record the whole thing. The way it's presented on the tax form is a bit weird, but the main thing is track all that stuff. Give your accountant more, and they will decide what is actually deductible and what's not. Right?
Be an expert tracker, and then let them sort out what you can take and not take.
And be communicating with them and tell them what everything is. But I would rather give them more and have them make those decisions.
And would you recommend in general that someone like me, like a reseller, it would be best to get an accountant to do to get their stuff prepared for taxes?
I would say so. It's
just because it gets so complicated.
Yeah, I would say especially if you're getting a home office deduction. The other big one is you can take actual depreciation on your home, and your home gets depreciated. I forget if it's the 27 years or the 39 and a half years. It's weird, but the IRS depreciation rules, again, it's very complicated. So yeah, especially if you're doing depreciation on your house, home office stuff, you'll want to get your accountant involved in that because there are certain forms you have to file for that.
Okay, now if someone were to, no, I'm lucky, right? I'm blessed, rather. I'm blessed because I have Jonathan, but you know, if I didn't have him, do you have any idea of how much it would cost a person? I'm sure it's regional, but how much would it cost a person to have someone, an accountant, do the books for you know, for the year?
Yeah, I couldn't say exactly. I think it depends on the type of firm too. You know, there are some firms that aren't necessarily CPA firms. Who are going to do it for a little bit cheaper. But if you're looking at a CPA firm, nowadays I'd say at the very low end, you're looking at probably a few $100s, if not probably with a small business, or at least a fairly complicated small business with inventory and all that, maybe up to, you know, $1,000 or $2,000 or more. So,
okay. But depending on how much they can help you save on your taxes, you know, and
to make sure, and the other thing is make sure things are filed correctly.
Yes.
Right.
You don't want to get audited.
Right.
All right. So let's keep moving along here. We had some people say that they struggled with knowing which forms to file, and this likely is some people who are brand new to reselling, which is totally understandable. You know, if you've never owned your own business. So let's get a little bit into that. What are the basic forms people need to know how to file and how to file them, electronically or whatever.
Sure. So, in terms of the forms, and I'll say how to file them. So you can just print off all the forms and mail them in.
So is this IRS website?
Yeah, so you can find all the I just look up on Google the tax forms and get them. I always make sure when you're getting stuff like that, irs.gov, right? Not some other website that's trying to masquerade as the IRS.
Yeah, make sure it's legitimate.
Yeah, but I just get all the forms that I know I need, and I do them. So you can actually get a PDF fill-in version.
And so what are the names of those forms?
Oh, it depends on who you are, but for your business, most likely...
For a sole proprietorship.
Yeah, so again, this is if you are a sole proprietorship, there's one owner of the business, you aren't incorporated, it's just a sole proprietorship. You're just gonna file all of that on your normal individual tax return, on your 1040 is what it's called, the form 1040, which is a form that anybody who makes,
everybody has to do it.
Everybody, even if you're a W-2, as long as you make a decent amount of income, you always have to file that. Okay. Now, where you're going to report the information for your business is on Schedule C of that. That's going to ask you how much was your income, how much was your cost of goods sold, how much was all of your expenses, and all of that.
And we know you guys had some questions about how to deduct, cost of goods and stuff if you there's different methods of doing that, like when you sell it or when you get it or whatever. So we're going to get to that, but yeah, let's keep going. Hopefully that helped. And,
right. I'll also say on that too. I think one of the big misconceptions is, well, okay, let's say I'm the only owner of the business. I'm a sole proprietor, but I've also filed with my local or with the state to be an LLC.
Yeah, LLC, some resellers are starting to do that.
Right, and I think that's a great idea in general.
That's what I was, guys. I used to own a piano studio for about 10 years, and I was an LLC with that. For liability reasons.
Again, yeah, I'm not an attorney. This is from a non-attorney standpoint. I'm not providing any legal advice. I don't have a law degree. I'm not an attorney. Especially if you're having any clients or employees or subcontractors come to your place of business, they get injured or something, don't be a sole proprietor without an LLC. Not a good idea.
So if you have employees and stuff, that would be a good idea, right?
But if it's just you, so being an LLC, the thing to remember about that is a legal designation. Doesn't have anything to do with taxes. Mm-hmm. So you could be an LLC, but what you're treated for as the IRS is what's called a disregarded entity, which means the IRS doesn't see that the LLC even exists. You file as if you weren't an LLC. But the LLC is for legal protection in case you're sued. They would sue your business, hopefully, as opposed to you personally. So I just wanted to add that in there, that you're still treated. So I'd say for 90% of you out there, it's going to be, I'm a sole proprietor. I'm filing on Schedule C of the individual tax return, which that info is going to flow through onto your main tax return, which is Form 1040 on there.
All right, thank you. Sounds good. Okay, so let's keep going, guys. We're going to get to your specific questions, and we had quite a few of them. So thank you for commenting those. So we'll just get right to the questions.
All right.
This question is from Mary. Mary says, "Hi, Sarah and Jonathan. Do you use a spreadsheet? And if so, would you be willing to share and make it available for us?"
I do use a spreadsheet, kind of like I mentioned. It really is very basic. It's got just all those rows. So I download the transaction activity every month from our bank. It's got every row. It's got, here's the date, here's where the transaction happened, here's the amount.
So we could perhaps share that template as a file, like in the description down below.
Yeah.
For them. Okay, so Mary, we're going to share that with you. It'll just be the template, you'll have to fill in your numbers and stuff, but we can share.
Yeah, I can kind of show you how we organize that up. It really is very basic. It's just got columns with, description. I put a field for the month So, January, February, March, so that I can then run a table that shows, okay, well, pull in all transactions from January or March, right? So I can see by month. And it's got a field for the transaction number, which in that case is just the receipt number. So I can find that.
But for someone who doesn't know how to use Excel, you could still use it and just input your data.
Right. So
manually input it, where you want.
Absolutely. So you could look at your bank account.
Probably what I would be doing if I didn't have Jonathan, because I don't really know how to use Excel.
Yeah, I think the key is going to be putting everything in categories. So saying, well, this is supplies and having an understanding of what everything individually is, and the receipt should show that. So the receipt is where you see, okay, this is exactly what I bought at this place at that time, but then I'm saying, okay, well, that fits into the category of this.
And I believe he keeps our files on a thumb drive, like a flash drive, after he scans in all the receipts and just files them in like one folder on a flash drive.
And you should back that up.
and back it up. So you
maybe a couple times, yes.
So Mary also says, do you use the cash method or the cost of goods sold method?
Ooh.
I am very part-time and I've been using the cash method. Thanks so much.
That's a good question. So I did a little bit of back research on this, and this is a good point in IRS rules in general. I don't want to get too much in the weeds with it, but often what will happen is, so this rule, they kind of attempted to clarify this in Trump's 2017 tax law. But what often happens is a bill will go through Congress, and in order for it to get passed, it will get beat up to where it's super vague in order to get the votes to pass.
Of course, right?
Then some, and so it may be...
To make it a lot harder for us to understand.
Right, and so it's like the idea that, well, it just makes perfect sense coming out. That's not necessarily true. Sometimes the IRS will come out and then say, okay, well, there's this law that was passed, and here's how we're interpreting it. Here's how we're actually going to enforce it. Well, in this case, with the inventory, it still seems to be kind of vague. There's a lot of discrepancy of, okay, well, what does this actually mean? It seems to say something about, like, well, if you keep an inventory on hand, then you need to use the cost of goods sold method. So what qualifies as keeping an inventory? Is it?
And for those who don't know about Mary's question, can you explain what is the cash method versus the cost of goods method? So what is the difference, and then which one do you think is better? Sure.
So the cash method is just, okay, when I buy inventory, I expense it immediately as I buy the inventory. Whereas I guess you would consider that as the cash method. From an accounting perspective, we call the other way as the accrual method, or what I'm guessing she is referring to as the cost of goods sold method, which is where you try to match up the expense with the revenue. So it's when you sell the item that you bought, you also get to deduct the cost of the item that you sold.
Which is trickier.
So you don't get to deduct the cost of the inventory that you buy until you sell it or until you dispose of it. If it's bad inventory, then it gets expensed at the time that you dispose of it, because you're not going to sell it ever. So that's kind of how that works. So then it makes sense, generally speaking, the preferred method would be cash method, right? Because you get expense it immediately, right? So you could buy a whole bunch of inventory at the end of the year, expense it in that tax year as opposed to waiting.
Yeah.
That would be preferred from a taxpayer's perspective, generally. It depends on how your tax brackets are that year and all that good stuff. But what I'll say is it seems to be kind of vague right now as far as whether you can do that, and you have to be a small business taxpayer and all that stuff.
So the way we do it is what?
We do the accrual method or the cost of goods sold method. And I will say, I think from the research that I've done, and again, I'm not purporting to be an expert on it, but I would say from the research I've done, it's vague enough that I think that you can make a decent argument for using the cash method. The safer method is the cost of goods sold method. If you want to dot your I's, cross your T's, the cost of goods sold method is going to be the safer method, but I think there's a decent argument for the cash method. So however you want to see that.
All right, Mary. So hope that is helpful for you. We explained what we use, and we'll also share that spreadsheet template for anyone who wants to use it. And if not for anything else, at least you'll, even if you don't use it, you're able to see what we track and stuff like that. All right, we've got a question from Paula. She says, what do you feel is the best approach for resellers, money in versus money out, or itemize the individual sold pieces and cost of goods versus sales? So it's a similar question, I think.
Okay, so is that, I think it's about how do you track inventory, right? Like how do you, so yeah. And that's a good point. So if you're doing cost of goods sold, how do you compute cost of goods sold, right? You can do it. I would say the surefire gold standard way is to track each individual item. Now, I will tell you, most businesses, like most retail stores that have a lot of inventory, yeah, they don't do that.
Millions of items.
No, so there's a bunch of different ways legally that you can do it. I'll say for us, I don't know that it's a surefire, like there wouldn't ever be a problem. We just estimate. So what you can do is you can say, okay, what was my inventory at the beginning of the year? So I would have some kind of idea of, okay, what on average does it cost me to purchase an item? So you can say, well, if you're going to the Goodwill.
It's an estimate.
Yeah, so if you're going to the bins and you're going to regular Goodwill, maybe kind of average those together and say, well, it costs me on average maybe $3, $4, $5 an item. And so you can count, okay, at January 1st, how much inventory did I have on hand? Well, maybe I had, 1,000 pieces at $5 a piece, so $5,000. You know how much you purchased in inventory during the year, right? Hopefully you're tracking that of all your receipts. And you know what your ending inventory is. So you say at December 31st, well, maybe I had 4,000 in inventory times $5 a piece, that'd be 2,000. If I take my beginning inventory plus my purchases and subtract out the ending inventory balance, I get to my cost of goods sold. That's called the inventory equation. So that's a good way to kind of...
so you feel that is the best approach? She asked, what do you think is the best approach? Well,
I will say the best approach, the absolute gold standard, is to track the cost of each individual item.
So that would be like the most accurate approach.
The most accurate. If you are risk averse, if you're the most risk averse person.
Which, guys, Jonathan's pretty risk averse and he doesn't do that.
I'm pretty risk averse, but that's why I usually say, hey, if somebody takes this out, we use a very reasonable estimate on our cost of goods sold every year. The IRS agent wants to come and look at our place through all of our inventory and count all that stuff up. Be my guest. Have fun.
Yeah.
They're going to pay that person a lot more than it costs them to actually go through all that.
Yeah.
So, but I will say the big thing, whatever decision you make on that and say, well, record what you're doing. So say at January 1st, we had this amount. And so if you have a methodology and you've actually thought about it, that will go a long way to say, okay, we're not just coming up with this.
And then be consistent with the method you choose.
Well, and that's required. So if you're doing that on your taxes, it'll show, there's a cost of goods sold sheet where it'll have you track it. So it'll show what your ending inventory is. And then the next year, your beginning inventory better be what your ending inventory was last year. Yeah, otherwise, that might flag an audit, right? If you're like, oh, this is different this year. What happened, So
Paula, we hope that helps you. She also says, hopefully that makes sense. Yeah, it made sense.
Hopefully so.
She says, my goal is to go down part-time at my normal job. That's awesome. Happy for you. Hopefully that will all work out for you. Reselling is great, of course, why would I have a whole YouTube channel about it? I love reselling, so I'm happy that we can all be here and support each other. All right, we got another question. This question is from Mary Beth. She says, I've heard some people say that you only deduct the amount you spent on an item. I've also heard that no matter how much you sold, you deduct all of the money you spent on. Which way is best? So all three of these questions are actually kind of variations of the same idea, and I can tell that this is kind of a confusing part of doing taxes. Is like, how do you actually do it? So, and which way is best? She's asking. So that was kind of answered.
Yeah.
In what you just said. So hopefully that helps you too, Mary Beth. Let's see. Next question: learning, living, and lilacs. Should a reseller become an LLC at a certain earnings threshold? And just got another question, but we'll start that one.
Sure. So I already basically talked about that, but just to rehash in case you're only seeing this part, is that LLC is just a legal designation. Doesn't have anything to do with taxes. If you are the only owner of your business and you're not incorporated, you're still going to be treated the same on your tax return if you're an LLC or not. The protection the LLC gives you is a legal protection in that if you're sued, hopefully it would be your business that is sued. I will say if you become an LLC, you have to treat that as a separate business. The courts will look at, if there's a case, the courts will most likely look at, did you actually treat that as a separate business? And you'll probably have to get a separate bank account. So if you're intermixing everything and just treating it as like a personal piggy bank, the court may say, well, you've pierced the corporate veil in reality. You're basically treating it as an extension of yourself. So you just got to be careful about that. I personally, again, all of this from a non-attorney standpoint, I don't have a law degree. I'm not a legal expert or an attorney.
But he did help me manage my LLC for about, I had it for almost 10 years. Yeah. And then he joined in helping me with it, at like the 4 or 5 year mark. So he's been helping me with business stuff for several years.
Sure. So I would say at any point where you have more than one owner in the business, or if you have employees or anybody coming to your business, any clients coming to your business.
So really, like for me, guys, there's no reason for me to become an LLC because I work by myself. I don't have employees. I'm not having clients come to my house where they could get injured or something and I get sued.
I don't want to say there's no reason. There's always a potential reason, but there aren't any obvious reasons.
There's no obvious reason for me personally, and I know a lot of you that are watching my channel do have a similar business format that I do, where you're kind of working for yourself. But I would say if I had employees, I would strongly recommend getting the liability protection there with that.
So then I'll branch out on that just a little bit and say, where it gets more complicated then is, okay, let's say you and another person own the business together.
Ooh.
The default for that is a partnership, and that has its own tax form, which is a 1065, the 1065.
Okay.
And so you file your taxes on there, and that follows through to each of your personal tax returns. And if you're in business with anybody else, you gotta have some kind of a partnership agreement.
No matter how much you think you can trust the person.
You want to have an agreement that says this is what happens if anybody wants out. Even if it's family.
Especially if it's family.
This is what happens if anybody wants out, or if anybody does anything like goes to jail or something like that.
What happens to the business?
Right, because you don't want, or like if they die, like what you don't want to be in business with somebody's wife or husband or whoever, right? So that's that. Then if you incorporate, then that gets even more complicated. So you could be an S corporation or a C corporation. Talk to your tax advisor about that if you're even thinking about that, because then you have to set up payroll even for yourself as an owner. That gets really complicated. There can be some tax savings potentially there, but you wouldn't do that unless you're really making quite a bit of money and you're serious about getting a payroll system, and it just gets a lot more complicated administratively if you're doing that. So
okay, cool. So Learning Living and Lilacs also asked, if just getting started, do earnings need to be reported if under a certain amount? Example, if someone is brand new to selling and only made $2,000 for the year, does that need to be reported in taxes, or only reported if over a certain dollar amount? Thanks. That's
a good question. So generally speaking, income, like if you have a W-2 from a job, income, you wouldn't necessarily need to file a tax return unless you made more than the standard deduction amount. So, so you can look up on the standard deduction. So as a lot of you I'm sure know, so you can either itemize your deductions or take the standard deduction. For a married couple now, the standard deduction is I think like over $26,000. So it's a lot.
Wow.
They raised that up with the Trump tax law in 2017, I believe. But that is for like W-2 income that you're getting like from an employer. If you're getting self-employment income, which majority of you probably are if you're listening. And
they're
you're
resellers,
right? So if you're a reseller, you probably are getting self-employment income. That's a different story, because for normal federal income tax, yes, you get that big deduction, but you also, so the short answer is yes, you do have to file, probably if you're over, and I'd have to check the amount exactly. I thought it was like $600. It's a few hundred. It's if your total self-employment income is over a few $100s.
Okay, but it's not like 1,000.
No, it's very small, because you have to pay self-employment tax, which is a tax that if you get like a W-2, you don't have to pay. And what that is you have Social Security and Medicare tax.
So she asked only report if over a certain dollar amount. So you don't know what that dollar amount is offhand? You think
Offhand,
it's around $600?
I think it's around 600, but I'd have to check just to be absolutely sure. But yeah,
okay.
It's a few $100s where the limit is. Yeah, where you just have to start filing, because you know, if you're self-employed, you're not paying Social Security and Medicare taxes, which the rest of us are paying out of our wages before we even get our compensation.
Yeah, self-employment tax can really be killer, because
it's a killer.
Oh man, when I had the studio business, that's a big reason why I switched, because I can make so much more money doing reselling than I could with teaching with the music studio, even at like high rates and full capacity and stuff. But like, you act as, you know, when you're self-employed, you are the employer and the employee. So like for Social Security, Medicare, stuff like that, you donate both portions. Like, it's not like your employer matches, you know, so what was it, like 33%?
Yeah, so that's kind of like overall, but the actual self-employment portion, I believe 15.3%. If you're a W-2 employee, it'd be 6.2% of your wages are taken out for Social Security and 1.45% for your Medicare. Your employer matches that. So your employer pays half of it, employee pays half of it before they even get their paycheck. As a self-employed person, you are both the employer and the employee. So you get to pay both the employer's portion and the employee's portion. That's just for self-employment tax. Then you have your regular federal income tax, which could be as low as, you know, 10% or lower, or as much as, I think the top tax bracket is like 36% now. Then you have state taxes and maybe local taxes depending on where you live. So
quick question here, back to the forms, because I'm kind of thinking through this as a person who has no idea what they're doing, and I don't know a lot of this stuff, so I'm kind of asking too, what if I was in your guys' shoes. So those forms that you talked about, are those state forms or are those like federal forms?
The ones I was talking about are federal forms.
Okay.
So you'll need to file.
So go to the federal website, not your state's website, to get those.
Yeah.
Okay.
So those would be available on the IRS website, right?
Okay.
And then you'll need to assess whether you need to file in your particular state. There are some states that don't have. I believe there are some that don't have a personal income tax. Yeah. So yeah, there will be some that don't. Florida, Texas, I believe. Okay. But then lots of others will. So.
All right, hopefully that helps answer your question, learning, living in lilacs. And we have another one from you. She also asks, just getting started reselling. Congrats, so happy to have you here. It's great. It's a great gig to get into, great career. She says, my husband already has a home office for his business. Can a household write off 2 home offices? I'll start out with all inventory, supplies, etc. at home? Question mark.
That is a great question. We went through this because Sarah's got her, she still kind of has a little bit her piano business. Plus, we have a room where we store inventory.
So we've got a piano studio, like a whole room for that, plus a Poshmark room.
Yeah. So yes,
I'm taking over, guys.
Yes, absolutely, you can. I would say, especially if they're for 2 separate businesses. So at the top of the form where you're doing the home office deduction, it's going to ask you which business this is for and who is the proprietor of that business. So you should do this on 2 separate forms for each of your businesses. Most of the information is probably going to be the same, but the actual size of the rooms may be a little bit different. But we actually went through a little bit of an issue with the IRS on this because they had said, well, you've underpaid tax. And so we got notice in the mail. It's the other thing. If you get a notice from the IRS or a State Department of Revenue, don't assume that they are correct. They may just be fishing.
Question everything.
They're going to say, well, we think that you owe this amount. They might have just estimated that. They may not know, right? So don't just pay it and be like, oh, they're on me.
Or maybe a computer did it.
Give it to your tax advisor. Really look through the numbers. You always can request a transcript of your taxes from the IRS that will show, here's what we show is that you reported on each line of your taxes.
Be prepared to challenge what they say.
Yeah. I had to pick through, because I ordered a transcript of our taxes, because you can't get through to anybody hardly on the phone anymore. They'll send you down some deep dark hole that you can't get out of. So I asked for a transcript, and so I went through each line and figured out, because we've got those 2 forms for home office, they didn't see one of our forms for home office.
It was their fault.
So, I mean, is it possible that it got lost in the mail or something? I don't know.
But we sent it.
We sent it, right. So then I wrote them a letter back and explained, hey, we actually do have 2 rooms for separate businesses that are run by the same proprietor. Here's all the forms that she will need to see. They wrote back to me and said, you're right, okay. And it was over. So, yes, you can. Make sure you file on 2 separate forms. Save everything. Question everything. Moral of the story.
Yes, they are not infallible. So. All right, we have another question here. This is from Mary Beth. How often... Oh, that was my phone. How often do you send tax payments?
That's a good question, too. So I will say, we are in kind of a special situation in that we have 1 sole proprietor and 1 person who has a W-2. I don't want to call it cheating the system, but what I do is I basically just adjust my withholding to cover for what she's doing. Because if you're having withholding done through an employer, through a job, through a W-2, the IRS counts that as being throughout the whole year. So it doesn't really matter if it's at the beginning of the year or end of the year. It's just one amount for the whole year. So I do that. Now, if you don't have that, or you don't want to do that, and you just want to send in tax payments for that part,
what if they're just a reseller and they're single and they're, that's the only employment, how would they might be asking how often does a person
should
a person send tax payments?
Right. So you're definitely thinking about it the right way, because you have to send in the taxes as you earn the money, not just at the end of the year. The IRS requires you to send them in quarterly. The amounts are weird, or the dates are weird. So the first quarter is due April 15th. Second quarter is due June 15th, which is only 2 months after the first quarter, which is kind of strange. Third quarter is due September 15th. And fourth quarter is due January 15th of the following year. So you have a little bit of time to figure out, well, how much do I have for the whole year before you actually have to pay. When you're doing that, make sure you get a voucher. So you can find a voucher online. I think it's called a 1040-V. Okay. So you can pay online now and do that, I believe. Or you can get a voucher. So if you're sending it through the mail, make sure you send a voucher and write certain things on the check so the IRS knows whose account to apply the money to. You need to be very explicit with them so they make sure to apply it correctly. And
when in doubt,
check with your state too.
Yeah.
Check with your state. You may owe for state as well, and you may have to pay on their website too.
Always veer on the side of giving them more information and being more explicit than less. So, all right. So quarterly.
Yeah, on those dates, so you got to know. Okay, well, how much did I? Yeah. So the idea generally would be 4 equal installments. If you made a lot more,
and are those estimates?
Estimates, yeah. So
okay, so first we have to estimate and then divide it by 4.
Estimate, probably leave a little bit of wiggle room, just to be the safe harbor rule is that as long as you pay 90% what you actually owed that year, you don't owe a penalty. But you do have to pay it at the right times too. Right, so but you can do it online as well now. That's probably a little bit easier.
Okay, great. Hopefully that helps Mary.
Again, online, on the right website. Double check that you're on the right website, sending money, always.
Yeah, because once you send it, you may not get it back.
And especially with the IRS, there are going to be impersonators galore because everybody has to pay the IRS, right?
Yes. So. All right, here's Mary Beth again. She says, taxes on items I buy. How to avoid paying those? Are those tax deductible? So
so like inventory?
Yeah, I think she's saying like she bought some inventory at Goodwill and she's taxed on those sales tax. Is there a way to avoid paying that, and are they tax deductible?
Yeah, so any amounts that you're paying, so if you owe sales tax, I believe that is fully deductible, sure. Like the overall amount that you're paying for that plus any fees or taxes, anything like that.
Then there's that reseller license we were talking about.
Yeah, so that's going to depend on your state. So you'll want to contact whoever the legal official is at your state. Might be the Secretary of State, whoever it is, to get some kind of an exemption certificate. You'll have to see if you qualify to be exempt from sales tax. Again, sales tax, completely different issue than income tax. So there's been a lot of interesting case history, and I'm not going to go into this all, but about, well, if I sell something, if I'm in Indiana and I sell something to somebody in California, can California collect sales tax on that? And there's a recent Supreme Court decision that basically said, yeah, maybe. And so it gets complicated. Now, I believe a lot of the websites like Poshmark and eBay should already be doing that for you.
They are.
But yeah, if you want to be exempt from sales tax as you're buying inventory, check with your state. You'll probably need to get some kind of exemption card because a lot of businesses that are buying things for their businesses will have an exemption
I'm hoping
card.
to get something like that. Why haven't we gotten one of those yet?
It's a little complicated. I talked to a few people through Indiana and trying to find who the right person is, and the right forms are a bear. So we're in the process of it.
Yeah,
it can be a bear.
We're hoping to get that because, to my understanding, I'll just be able to present the card to the clerk at whatever store I'm at when I'm purchasing the goods, and then they'll not charge me the sales tax.
The other thing that I'm not quite sure about that on is Indiana going to be okay with us having an exemption certificate if those sales taxes are eventually going to be paid to states like California? Because Indiana wants their cut, right? So yeah, if you're a retail business in Indiana and you're buying stuff in Indiana, eventually sales taxes are going to be paid in Indiana for that stuff. So they're like, yeah, fine. But what if you're selling out of state and you're buying in Indiana and they're going to charge you sales tax? I don't know. This is an issue. There was a recent case that opened this whole thing up of other states on online transactions out of state that opened up a can of worms with, and now all the states are trying to react to this and pass laws to get all the sales taxes they possibly can in, and so it's all a huge mess. All
right, so Mary, how to avoid paying taxes on those? Possibly just check with your state. It's going to be state by state, possibly certificate, and then the taxes you pay on items deductible? Yes. So just deduct the receipts you have with your cost of goods, the full cost.
Yeah, I'll say definitely deductible for federal income tax. Can't say for sure for state tax. I don't know if there may be a specific state law that says you can't deduct taxes paid to our state on our state income tax return. That could be. I can't say for sure.
All right, so that concludes the questions that you guys had given me. I've just got a couple more here I thought might be interesting to ask Jonathan, then we'll wrap it up. So what is the best piece of tax advice that you could give a reseller?
Track everything. I like to think of it as there is no surefire way that the IRS is always going to be completely okay with everything, always. But I like to talking about it as like you're putting up a hedge of defense. The more accurate, the more contemporaneous, which means, in the moment, you don't want to be trying to figure everything out way at the end of the year. The more specific, detailed the record keeping that you have is. If you're making any decisions, if you're like, well, I don't know exactly how to do this, but I'm going to do this way for taxes, document what you're doing. The fact that you had a thought process and a reasoned out thought process will go a long way. It may not get you scot-free.
So write down why you did what you did.
Write down why you're doing the things that you're doing. Any big decisions that you're making. Track all the receipts.
Okay, so essentially, best piece of advice: stay organized. Track everything.
Yep.
When it comes to your finances. Okay. Anything else? Final thoughts that you would like to share that you think is important? And I think you were going to put a little plug for if anyone had any other questions going forward.
Yeah. So if anybody else has any other specific questions, maybe off of anything I said or anything, feel free to put it in the comments. Maybe we can do a follow up here soon. Mm-hmm. I would say one big thing I guess that we didn't talk about is, if you have a tax advisor, try to get everything to them as soon as possible.
So when's the deadline for everybody?
It should be April 15th. Now, I'll say with those quarterly estimates that we talked about and with April 15th, sometimes there are holidays around that time. Sometimes there are strange holidays around that time that you didn't even know existed. So it may be after that, depending on if it falls on a weekend or on a holiday. Don't give your things to your accountant like a week before the tax deadline.
It'll stress them out.
It will stress them out, and they may tell you, we can't do this, or we're going to have to do this later and put you on extension, or whatever it is. So, and
your accountant will really, really, really appreciate if you have stayed organized.
Yes. If you're organized and if you're getting it to them ASAP.
Because you don't want to give them a pile of stuff and they'd be like, I have no idea what I'm looking at, right?
Right.
I mean, you need to have some comprehension of what you're tracking, and they can sort out the payment stuff as far as what forms and what goes where, but you've got to track everything else. It's kind of a big responsibility if you've never had to do it before. So get a system going that works for you, stay organized, and then keep the routine going. So, all right, is that all?
That's all.
All right.
All for now.
Thank you.
Absolutely.
Alright guys, thanks so much for watching. Please like this video if you enjoyed it, if you benefited from it, and this information was helpful for you. We may be back with another video if there's additional questions, but for now, take care. I'll see you again very soon. Jonathan may be back for another video at some point, if he wants to.
Sounds good.
But you'll definitely be seeing me back soon. So, alright, take care. I'll see you again very soon. Bye-bye.
Alright. Enjoy.